How we doing, friends? Welcome back to Continues to Tick. My name is Jesse. If it's your first time here, welcome, friends. If you continue to come back, just know it makes me very happy. This has been a long journey. It'll be next month where we'll finally have 4 years of this dividend portfolio journey. And honestly, it's been a ride. It's been a ride. In this video, just like we normally do, this will be a normal dividend portfolio review where we choose a topic. We go into it in depth. I give you an update, but I do have a topic for today's video, and it's what's the actual cost of opportunity. So if you're curious about this part only, or however you want to move about in this video, please use the timestamps down below. I know these videos get kind of long, so if you're curious, friends, that's the topic for today's video. As I've mentioned, next month will be 4 years of being a dividend investor, and this has been a journey. There's been good parts, there's been bad parts. I've been sticking to my strategy in terms of, holding, not really selling very often, but I do have some news. I'm going to finally sell a stock holding in this portfolio, and I'm going to sell all of it. I'm just going to get rid of it. Maybe you could take a guess if you've been here for a while. So it may not be nothing new. I've been holding on to it for too long, in a way longer than I should have. But, that is how these things go. You can't be perfect. On the opposite of that news, I do have NVIDIA, and they've continued to balloon. I think it was maybe a few months ago I was, contemplating, should I sell it? Because later this year I do want to take my parents, right, as they're getting older, on a dream vacation, right? Their dream vacation for their life. And, me having to switch jobs, right, even though it's a promotion but a pay cut, my finances are getting tighter. So I was like, man, let me sell some NVIDIA, to finance this trip, right? Let me give it a haircut. I decided not to do it. If you've been following NVIDIA for a while, you know that it ballooned and just had a stock split. So part of me is glad. I'll go into that with you guys. But here we are at $86,820.33. So let's do this portfolio update. This is M1 Finance, by the way, if you guys are curious, if you guys aren't familiar with them. I've been using them since the very beginning of my portfolio journey here. I really like that you can get fractional shares. Like, that is so important to me. No commissions. It's been really solid. And as a company, they've only grown bigger and bigger. I don't know why I wanted to say that for this video, but maybe I'm just reminiscing on the fact that it's almost going to be 4 years that I've been a dividend investor, which, take note, in the grand scheme of things is nothing. Like, it's not a lot of time. I started around the age of 24 and a half. I'm 29 now. Hold on, I see a bug. Oh my God. All right, friends. All right, we're back. We are back. I saw a bug. I really did not want to hurt it, but it was a house centipede, and I just didn't have the time to take it outside. They say those things are actually okay to leave in your house, but man, they look scary. If you've ever seen a house centipede, you know what I mean. But yes, I think I was talking about M1 Finance and reminiscing on, how it's been 4 years and how I've used them, and I've had only good experiences. So, yes. And as far as my portfolio here, going back to that, this is the all-time chart, right? Earned dividends all-time is $5,765. That is awesome. That is money that isn't mine, that was given to me, right? I like to think of it that way in very black and white terms. So it's really cool to see, right? And as far as my money-weighted rate of return, it says I have a market gain of 16,000. Take note, it's money-weighted rate of return. If we wanted to be a little bit more accurate with it, I think if I go to my holdings, I could see my cost basis is $70,000 or $70,952. My current value of the portfolio is $86,820, and my unrealized gain, right, is $15,868 or 22.36%, and that is the most accurate. This money-weighted rate of return stuff, I'm just not a fan of it. I wish they would go back to their other interpretation of the data, but it seems like that is not coming back, and that's okay. And as far as year to date, I'm just curious. Earned dividends is $981. Weighted rate of return is 12%. Market gain is $7,000. This past week, earned dividends $78. Let's see, over the last 365 days, we've earned $2,300.80 in dividends. That's sweet. That's pretty sweet. And let's go down to our sector allocations here for a bit. Like I said, this isn't my big monthly portfolio review, but I think there's some important, sectors here to touch on. One, for example, is tech. And let me go up and switch this to all time. Let's go back down. So tech, according to this face sheet here, it says it's $13,328, which is a 418% return. I believe it's going to adjust, and I'll show you on a different screen here. But for the most part, what that communicates is that tech is booming. It's going to be Nvidia. The one thing that leaves me feeling, somewhat just bothered, I don't know. I mean, it's a great thing, but it's the fact that my tech sector was only supposed to be 10%. And maybe I'm young, maybe it's fine, but the fact is it's one main holding that continues to balloon. And now my actual tech sector allocation is 20%. So let's just click on this for a second. And let's actually talk about this one. So this is gonna be the tech Nvidia stock holding that I want to talk to you about. So here's Nvidia. According to this all time, it's 1,601% return. I don't know how they calculate that exactly. Maybe with dividends. I did used to have another chunk of Nvidia that I did actually sell last year when I was going to Greece. So I believe this is overall mini weighted rate of return, including that. Because again, I'm going to show you here on this other screen what I mean. But Nvidia, let's click on it. So they just had the 10-for-1 stock split, right? I was holding about 8 shares. They gave 10 shares for every 1 share. Now I have 84 shares of Nvidia with an average share price of $13. Its current value is $131. So, it's hard to sell. Like, I'm sitting in such a great position. I've already made my money back in this holding. I sold about $2,000 worth. My cost basis was about, under $2,000. It says $1,100. And I've sold a good chunk to go to Greece. So at this point, as they say, I'm playing with house money. So it makes it very difficult to give up on this or sell it, give it a haircut, especially considering I'm only 28, especially considering it's Nvidia and we're going into, what would be this new age AI boom and everything with technology, and it's scary, but how quickly it's moving. If you've seen the movie Ex Machina, that's one of my favorite movies, but it almost seems like that is what we're going to in this whole society. It's pretty crazy when you actually zoom out and are looking at how everything is moving. It's insane. It's moving so fast. But I just wanted to share with you guys this little segment here on Nvidia, because I think it's hard to say, you never know, but at least at this point in time, I feel comfortable with my decision to not have sold my Nvidia and instead taking out a little bit of like a payment plan loan to pay off my trip that I'm going to be taking my parents to later this year. It's to Cancun. Yes, Cancun. That's where they wanted to go. And I'm glad. I mean, I took a $200 fee to do that payment plan, and Nvidia over the last month alone has made like $3,000 or something like that. Like, it's insane. It is insane. But let me get my head out of the clouds and let me show you. So this is all time. Nvidia, according to this percentage here, this is the one I wanted to show you, have an 888.15% return, which is an unrealized gain of about $10,000. So I'm sitting about $10,000 high on my Nvidia for the moment, and that is with already having sold a chunk. I believe at the time it was around 4 shares. Each share was around $500 or so. And at this point, it would have been 40 additional shares if I would have held on to it. But, you have to realize that isn't how the world works. And I remind myself, like, Jesse, that isn't how the world works. It doesn't work that way. But now that we're on this chart here, let me go all the way to the opposite side. So this one here is the one I want to talk to you about. We had the golden child, now we have the problem child in our dividend portfolio. The golden child, of course, we know who it is. The problem child continues to be my Walgreens. Like, they got new management. I've been holding on for a while. They actually did well during COVID, and that's why, I remained optimistic that, when the economy has a downturn, like, people are going to go to Walgreens. It's going to be, important, and it's too much. It's too much at this point. I've decided to go ahead and slice it off, cut all of it out, and it took a long time to get here. I explained my strategy. I hold and hold and hold until I'm given a reason to sell. I've been given a reason to sell, and now I'm going to sell. I'm going to sell my Walgreens, which is a total current value of about, like $1,600. My cost basis was $3,000, and I've lost, about half of it. So it's time to say farewell to Walgreens. I wish them nothing but the best in the sense of whoever continues to hold this. But it's hard. I always drive around, I see Walgreens everywhere, but just looking at the grander picture, I would not be surprised if they eventually went bankrupt and disappeared like a lot of other companies eventually, right? Not anytime soon, but eventually, or maybe they get bought out by somebody. Maybe at that point I should have held on, but I've already lost so much money, and this video is going to be about opportunity cost. So what a perfect way to segue into that by just showing you what I'm losing here in Walgreens. That's the news on the front of my portfolio. We got the golden child, the problem child, and my portfolio is almost at 87. This is a journey. Even if it goes down to 84 this upcoming week, that's okay. This is a dividend portfolio. This is part of the journey. And so here we are now, friends. And the topic for the video, in this video, I wanted to touch on and just chat about what is the actual cost of opportunity. Like when you think about opportunity cost, the actual cost of opportunity, what does that mean to you? In this video, I want to tell you what it means to me. So I broke it down into a couple segment points that I want to touch on. One, I want to talk about the cost of opportunity regarding money, another one regarding time, and I also want to talk about where most people get stuck in this, right? Because you're going to hear me talk about money and time. And then I also want to talk about where most people get stuck, right? I wrote inaction is lying to you, and I'll explain what that means. Let me put a parentheses here. And then this last one, your portrait, right? A little broad, a little vague, but I'll explain it. It'll make sense to you here in a second. So for this first one, friends, what is the actual opportunity cost regarding money? I just gave you two good examples in this video. One, I have Nvidia, and two, I have Walgreens stock. Complete opposite of each spectrum, right? Nvidia ballooning, Walgreens not. Complete opposites. Walgreens, I bought a while ago. I'm losing money over time. Nvidia, I bought a while ago, way before the boom, and now it's making me a bunch of money, right? I had an opportunity. One made it, one didn't. Regarding money, you're gonna have to realize that there's gonna have to come decisions. That's the point that I'm trying to make here. And it's gonna be hard to always hit 100% of the time, but you have to take the risk. You have to actually make a decision, and you have to leverage your opportunity. At this point in time, I'm forced to almost make a decision again. I'm choosing to continue to hold Nvidia, which can, come back and slap me in the face. And now I'm selling Walgreens, which for me, at least at this point in time, to me seems like a good decision because now I can leverage that money I have left into other holdings, which can make me money again. Because Walgreens has been losing me money for almost like 2 years or something like that. So the opportunity cost regarding money is something to think about. That's the easiest one to think about, right? You get placed in this position to have to make decisions. What's going to make me more money? What's going to make me less money? But at the end of it all, there's always a risk behind the actual decision itself because there's no guarantee to the outcome you desire. I've played this stock investing game with penny stocks. I've also played crypto. I have a story regarding to Bitcoin, buying Bitcoin when it was around $3,000. And I eventually worked my way up to 1.5 Bitcoins. If you've been in the ride, you would know that it's like back and forth, back and forth. It continues to do that to this day. And, my stomach couldn't tolerate some of these swings. Even now, it still continues to swing this way. So psychologically, it was probably the best decision for me. But financially, it was the worst decision. I sold 1.5 Bitcoins at around a value of $6,000. I probably would have had $90,000 right now if I would have held on to them. You can't look at life that way, but you also have to look at it that way, right? That is opportunity. You either lose on this opportunity or you gain on it. That's why for me, I love dividend investing so much because the whole game itself is the opportunity, right? It takes decades to unfold, but this whole time you're building up a passive stream of income. That to me is the cost of that opportunity, which is a lot lower, I would say, than being a growth investor because it's lower risk. Maybe you could say it's lower reward. For me, I personally would sleep better knowing that I have dividends coming in all the time, especially in maybe 3 decades from now. getting paid thousands of dividends a month. Like that would feel so good to me, versus being a growth investor and having to time it just right. Oh, you didn't sell Bitcoin at the right time. Bam, you get slapped hard, right? Oh, you didn't sell your Tesla at the right time. Oh, you didn't hold on to Bitcoin long enough. Like, these are all these things that come into play. These are all these things that also come to mind when I think of opportunity cost regarding money. So that's really all I had for that one. And as far as the actual cost of opportunity regarding time, this is one that I'm beginning to realize more and more as I go to mainly developing my career. You can see this as well when you're as an investor in the market, right? The stock market. Like I said, if I would have held Bitcoin for 10 years, I would have had way more than $3,000. If I would have sold Tesla at the right time, I would have had a lot more money and a lot more shares. Right now, I'm trying to learn my lesson from those and hold Nvidia, right? I'm trying to just hold this over time and see how it plays out. I've already made my money. The nice thing about it is you sell a chunk and now you're playing with house money. So that's a little bit of an example regarding the financial stock market in regards to time. There's a portion that you have to invest financially. There's a portion that you have to invest time-wise, right? Through a duration of a timeline. Most recently, I'm thinking of it in terms of career development. For me, I started my career about 5.5, almost 6 years ago, right? I've been in the workforce for over 5 years. When I got to the state work, which was about 6 months into my actual workforce career, there's people in there that have been there for decades. For me, I got in, did almost 5 years, and got out for a promotion. And there's people that are still there doing the same thing, making the same decision, same money, same trajectory from when I started and then I left. And for me, I'm on a different trajectory. That to me is the opportunity cost of time, is this idea that you can't just be stuck and expect more, right? You can be stuck and not move and expect the same. But if you expect more out of your life, right, especially financially, especially in your career, you actually want to invest in your career to make more money one day, you have to make decisions that are going to be difficult and take those opportunities and leverage them into better opportunities. So for me, when I zoom out, I invested almost 5 years as a nurse in the prison setting, also invested in getting my master's degree, which took about 1.5 years. I invested that time and I flipped it for a job promotion where now I get to work from home. And the trajectory for me to make more money is there, right? And I left that prison, I left that work environment behind, but I used that time there to build experience, set a base for me to go to school, and set a base for me to have the energy to think further ahead. What are my next steps? What are the next maneuvers I'm going to make in this life? And actually go and execute on this. So when I think of time, what comes to mind is thinking about my career development. Is this investment of time to better my future? And that is in summary, right? Investment of my time, this opportunity of this time to have a better future as I go and get older, right, in this life. So that's another example that I think about, the actual cost of opportunity. So this one, number 3, friends, where most people get stuck. So I wrote inaction is lying to you. This to me is something I've seen firsthand. I've seen it when it comes to investing. I've seen it when it comes to the workforce. Most people don't move in this life. Most people get to a certain place and they're fine with staying the same. But truly, are they actually fine? Because to actually be fine, it's a good question, but to actually be fine means someone has to dive deep into themselves and accept where they are completely, which doesn't just happen organically. Someone legitimately has to dive deep into themselves, into their thoughts, into their psyche, into who they are, and really accept every bit of them. And to do that, you have to overcome so much pain. There's so much pain in that acceptance, right? You could do that and move forward, but to act like that just comes for free, like you could just accept where you are and be completely content and without any pain ever, emotionally, psychologically, physically, it doesn't come for free. Most people choose to not move because of the fear of that painful step to change, of the discomfort, of failure. That's why people don't move. But if you lean into moving, you're going to realize there's pain there. You have to face all these discomforts. When I went back to school, I remember taking my master's degree. I said I would never do this because I remember how uncomfortable getting my bachelor's made me feel, with the presentations, with the timing of showing up for classes, doing homework, going to clinicals, doing all these things that I really didn't want to do. But I had to invest in that to have a better future. Same thing for my master's program. And I did it knowing I hated it. That was so hard for me, so painful. But I chose that discomfort because the opposite of that would be to stay the same and literally today still be in prison working as a nurse. Not to say it's bad to be a nurse working in prison, but I get to work from home now. At least that is how my dream came to be. I always wanted a job once I knew it existed to work from home. And I did anything I could to try to get it. And now I have it. And now it's exactly what I wanted it to be. I'm not getting paid what I want yet, but sometimes you have to pivot, make a sacrifice, do that for a bit. And then again, like I said, right, trade that card for a better one in the future. So I'm on that path. But inaction is lying to you, friends. This discomfort, this avoidance of discomfort is lying to you. You're not actually comfortable. That's where most people get stuck. Most people get stuck in this sense of comfort. But it's like you're comfortable today, right? Not facing the pain today, and you're comfortable today. And you're going to live your life, and you're going to feel this pain in the future with an unfulfilled life, with an area in life you didn't want to be in. You just found yourself in this part, right? Versus if you actually do the work and you face the discomfort today, you can almost in a way map out your life and get close enough to where it is you want to be. You may not be exactly where you want to be because life doesn't work out that way either, but maybe you're in a better spot than as if you would have never moved at all or gone into those discomforts. So friends, don't get tricked into this comfort. That inaction is lying to you. You're not actually comfortable. You're comfortable today, but you won't be comfortable in the future. Look at the people ahead of you. The people that have continued to move are in a far off better position than the people that have stayed the same. The only way through is through, friends. You can't get through by avoidance. It's not possible. And for this last one, friends, your portrait. Let me just explain this briefly, what I mean by this. Your portrait is that vision in the horizon that you set for yourself, that you see, right? You paint it however you want. The way I look at it, and the reason why I call it a portrait, is because I think of the word canvas, right? We all come into this world with a blank canvas. As you get older, you realize that you are the painter, right? And you have a canvas. We all do. We can all paint on this canvas and create our own portrait. I call it the horizon. In my horizon, right, friends, in my portrait, I'm the painter. I look at my life further into the future and I see how it is I want to live. That is the picture of my portrait. I have a nice car there. I have a nice house there. I have a relationship I'm proud of with myself and with my partner. I have my family around, right? Hopefully good, healthy relationships. Hopefully me with good health because I'm taking care of my body and my physique, taking care of my health, trying to stay mobile, focus on longevity. Hopefully I have inner peace, right? I'm hoping to have inner peace in that portrait, right? By continuing to meditate, journal, work on the things that bring me discomforts, work on those pain points. And I hope to have money. I hope money isn't an issue. So when I paint that portrait and I look at that horizon, I paint me not having to worry about money. And that's my portrait. That is just part of it. How do I get to that portrait? I'm the painter. Well, I need to put in the work to get to that. I need to do it. I have to hold myself accountable to that. That is my vision. How do I get there? By doing the work myself. I'm not just going to land in that spot. And that's something that I eventually took some time to realize, that I am the designer of my life up to some capacity. And so are you and yours. And so friends, that's going to be it for this video. Thank you so much for listening to the ramble. The dividend portfolio continues. We'll see where we're at in this next big monthly portfolio review. Maybe we'll be at 87, maybe we'll be lower. I'm excited to see how it plays out. But until then, friends, continue on your own journey. Think about your horizon. Imagine being the painter of your life, and I'll see you guys on the next one.